everybody. Welcome to the Fundamental Analysis webinar here with AvaTrade. My name is Troy. I'll be presenting. As we get started, keep in mind that there's risk involved with each trade, so you want to manage risk in a way that makes sense to you, and we'll go over some ideas in that regard if we have a trade or two to simulate. Also keep in mind that what we cover is not meant to be financial advisement, but is coming from an educational perspective. Now, from our main website, we can log in to our web trader platform, which allows you to trade on your MT4 and MT5 accounts from one location. And our app works the same way with the same tools and functionalities that you'll see in our web trader. So we log in here in the upper right and find ourselves in the web trader platform. Now, we could talk a little bit of general news from the fundamental side of things that were occurring yesterday leading into today. Last night, depending on your time zone, yesterday evening, afternoon time US, President Trump announced his plans more specifically for tariffs. That was anticipated to occur. So there was some fear yesterday pulling the markets down with regards to the tariff threats that are quickly becoming reality. I guess April 2nd is the named day for a lot of these tariffs to go into effect on Canada, Mexico, European Union, and other countries around the world. Tariffs being charged by the US for imported products. What the Trump administration is referring to as reciprocity for tariffs and fees that are charged on US products going to those various countries as well. Now, what he spoke about specifically yesterday were the tariffs on automobiles. I believe he said 25% tariff, which will be hitting the EU auto imports that come into the US specifically was one thing he talked about. Also, he mentioned Canada with tariffs on lumber, imports coming into the US and other products coming from Canada into the US. And so, not surprisingly, the markets responded to that with a bit of fear, a bit of selling. The equities, major indices pulling down quite a bit. And then we also can take a look at some of the currency pairings. It looks like the US dollars strengthening somewhat against the euro, against the Canadian dollar. I guess the US dollar is viewed a bit as a safe haven, even with the tariff threats going on, and is strengthening a bit with that fear. And so, and it makes sense that maybe with tariffs maybe being slapped on the European Union soon and on Canada, that those currencies might be weakened a bit by those threats and by maybe that reality soon, I guess, starting April 2nd. So that's kind of the backdrop coming into today. And you know, we can start by looking at something like gold and understanding not only would the US dollar maybe strengthen as a safe haven, maybe the yen also is considered a safe haven currency, but it's no surprise that gold is running towards all-time highs right now. Surging up in the past hours. This was an easy prediction after the tariff announcement yesterday and leading up to that gold would find its way potentially back towards the all-time high as a safe haven from a lot of the fears that are going on as the equities, as the stocks were selling off. You know, where will people put their money? And many times it's in safe havens like gold. And so we see it just in the past hour, a jump up in price of $15 an ounce or so, and in the past few hours, a jump up of $25 an ounce, just really surging up right now, gold, and that's purely fundamentally driven. Okay, this was something you could have already been trading on, perhaps with a breakout strategy, which I can outline. If we look at a little bit larger candles, maybe pull the chart down a bit, we start to draw lines. Here's the all-time high. Okay, so what's a breakout strategy? If it breaks past this resistance level, which is the all-time high, you could have a pending order. Okay, just above the all-time high, that if it breaks through that resistance, then maybe you buy with your stop loss back below and your take profit somewhere up at a named number higher. Now, many times you'll get a false breakthrough starting out. So if this does break through this all-time high and it just about touched it, you can see it just about touching here a moment ago, but not quite breaking it. Many times you'll have resistance at that all-time high type of level with any instrument, and you see it pulling back. It hasn't broken it yet. I suspect it'll try to break it, and the initial breakthrough might be a false breakthrough with a pullback. That happens many times. Then maybe the next time, if it breaks through, you might see a more permanent run. Okay, that happens sometimes. So a couple things you could be doing: selling from the all-time high as it approaches, and we do see on the 5-minute candles that as it reached the all-time high, it's pulling back. Okay, here's the all-time high line. Up here, the second line that I drew. We'll delete this one for now. Okay, right up near 3060, and it didn't quite get there. It got near it and pulled down. So it looks like it still has about $8 an ounce or so to go to reach the all-time high. So, fundamentally, there's a reason why gold is surging. Technically, if you want a short stop, you could just get below 3050, below this little pullback, and go for a take profit up near the all-time high, just below it, maybe at 3059. Okay, going after $8 profit, risking a couple dollars loss, and you can take a shot like that several times with small risk. And if you're right once, it's a pretty easy take. And it looks like it's really trying to bounce up off this little support level. That wouldn't be hard to do. 3059. It's just before the all-time high for a take profit. Just below the support level would be 3049. Okay, so going after 2,100, risking 900, I can adjust my trade size to risk the amount that makes sense to me. There I'm risking 300 to go after 700. So the amount that you're comfortable risking, there's 1.25 lot, trying to make 878, risking 376. Maybe I'm comfortable risking 1% of my balance, so I go maybe for a little bit larger trade. That's about 1%, 52,500, 530. It's right around 1%. And you can risk the amount that you want, 0.5%, 2%, whatever makes sense. And I'm going after about 1,200 profit here. So it started to climb as I was talking, so now I'm risking slightly more to that stop loss than 1%, but still a nice setup with a little support level, going after the all-time high in the direction of the overall trend, which is in line with the fundamental news of gold being bought right now as a safe haven. Okay, now this easily could pull back, right? We're getting in late, but this is just an example of trading in the direction of the fundamental news. But if we go back in time, okay, look how many times you'd have been a winner. So if you knew about the tariffs yesterday, which we did, you could have done this strategy several times already. So let's go, maybe not 5-minute candles, let's go 30-minute. And we can take a look at spots where it broke resistance levels and then kept climbing. So here. Okay, so let's say you got in yesterday when it was below this resistance level, and you see it hit and pulled back, and you do exactly what we just did. You put your pending order above the resistance, saying, I know the fundamental news is something that can drive safe haven buying for an instrument like gold, which is considered a safe haven. So the tariff talk was coming yesterday, maybe it didn't occur yet, and you see the resistance level. So you put a pending order right above. When you get the breakthrough candle, it buys, and now you get an easy win up to the next resistance level, which existed from the past over here. So you draw your support and resistance levels, it breaks through one, pending order buys. Take profit is at the next resistance level, that's a winner. It comes back down to that support level, you buy from the support. Maybe you lose once, it comes back up, you buy again from the support, another winner. You sell at the resistance, okay? Next pending order is above the resistance, waiting for the breakthrough candle. Here's the breakthrough candle on the resistance. Again, it buys, and again, another winner. Okay, so that's 2 winners, 3 winners buying on the breakthroughs and buying up from the support levels. And then again, here's another breakthrough, and again, in the money on a 3rd or 4th attempt, again, in the direction that you feel this instrument should move based on the most recent fundamental news, which are tariff threats, tariffs coming April 2nd, a lot of fear about that, especially out of the European Union, Canada, etc. And again, we're catching momentum. You could do a quick scalp move on this and close the trade already with $100 profit, for example, here. Very simple move when you know which way the fundamental news is pushing things. Okay, so that's gold. We could have been doing that step-up method with pending orders since yesterday. Each time it broke through the resistance, you have a short risk with your stop loss back below and a take profit up to the next resistance level. Now, there's only one more resistance level with gold. I clicked off the chart. Let's go back. The last resistance level is the all-time high. There's no resistance after that because there are no candles. So this could make its way to the all-time high. And if so, that's the last resistance level. So once it breaks through here, you could see a surge at some point. Maybe a breakthrough and a pullback or two, but you also could then see eventually a surge. And what's the next round number? I guess 3,100. We'd have to make up a number because there's no history above this price. It's never been that high, okay? So it's an interesting times with gold, but kind of easily predictable when there's such big news items as, global tariffs being waged on pretty much every country in the world that charges tariffs to the U.S. Now they're going to have tariffs waged on them by the U.S. So quite a news story to drive the movement on something like gold. Okay, what else can we look at? Let's go to the economic calendar. Obviously, that's fundamental news. And so besides big ticket headlines, like we just talked about, tariff threats, gold is surging, okay? At some point, it'll stop surging, right, or pull back. But you can see with the example I showed that more times than not, you'd have been winning as it broke through resistance levels and surged further, okay? And only trading in the direction that you think the fundamental news would push it. In this case, fear. Equities were selling off all day yesterday. Easy to predict that potentially a safe haven like gold might keep breaking resistance levels and surging higher. So that strategy worked very well yesterday and seems to still be working today as it approaches the all-time high. Now, how about news that we don't know the answer on yet? Rather than knowing that tariffs are coming, what about economic announcements where we don't know? Will they be good? Will they be bad? The actual numbers haven't come in on some of the announcements, and we can take a look then at today's announcements. Some have come in, but here come a slew of announcements out of the US, some of them rated high level, 2 of them, that could very well move US dollar pairings on the charts in predictable fashions. So if we look in particular at the jobless claims, that's really been something that's moved the charts quite a bit as these numbers have come in the past. The expectation is a slight tick up in jobless claims. So bad news expected, basically, right? The higher this number, the more people are filing for jobless claims, meaning they've lost work. So in this case, a higher number is worse than expected, and a lower number would be better than expected, okay? Now you might surmise in your mind, okay, if this comes in worse than expected, higher than expected, probably the USD would weaken. And if it comes in, lower than expected, good news, maybe that's good news for the US economy and the US dollar strengthens. But we're guessing, right? If we just try and think logically in our brain, what we can do instead is use these tools to see how did it actually move. If this comes in higher than expected or lower than expected, what has happened in the past? And sometimes it surprises you. It's the opposite of what you might think. Not always, but sometimes. So we take a look and we say, okay, whatever pairing we want, maybe I want USD JPY. Tends to be a bit more volatile than the Euro USD. The predictability sometimes is less than, but let's see. USD JPY, 4 hours after the jobless claims have come in the past, all these different dates when the announcement came in. Okay, it's 50-50 if I say all events. Half went up, half went down, 6 up, 6 down. You can't get more even than that. But what if I qualify this and say 4 hours after the event, what if these came in worse than expected, above forecast? Now all of a sudden it's predictable. 75% of the time, the yen strengthened and pulled the USD down. Why would the yen strengthen when initial jobless claims are higher than expected? Because that's bad economic news. When there's bad economic news, safe havens strengthen. And the yen is more of a safe haven currency than the USD, typically, traditionally. And so bad economic news, meaning higher jobless claims than expected, above forecast, 75% of the time, then the yen pulled the weakening USD down. The yen strengthened more than the USD. Okay? What if it comes in below forecast, meaning better than expected news, less jobless claims? Look, it's the exact opposite. About 2/3 of the time, the USD went up against the yen. The yen weakened relative to the US dollar, strengthening with the better than expected economic news out of the US. Okay? So there's clearly something here to these numbers that you get the exact opposite movement statistically. It's not 100%. You're not going to win every time, but you can see that there's a relationship between how these numbers come in and then how the movement goes with this currency pairing over the next 4 hours. Now we could say, well, what about the first 5 minutes? You have over 4 hours, it went 77 pips, usually up. What about the first 5 minutes? Okay, also up most of the time, but look, only 19 pips range movement, and a couple of them were down. So a lot of them had very little movement, and then after 4 hours, the range movement was much larger, 77 pip range movement, with most of them going up, and the largest one rising 96 pips on this one. Okay, we could check and see, what about Euro USD? Maybe the movements are more predictable or larger. Not the case. Below forecast, it's 50-50 with Euro USD. With the USD JPY, we had better predictability. Okay, 63% up. So you could play around with the currency pairing, see which ones in the past gave you the best statistical reaction. I think it's the relationship of the yen being a safe haven and weakening with good news while the other currency strengthens with the good news, and vice versa, that gets the bigger movement and the better predictability sometimes. So this is how this can help you then be ready to say, all right, I'll watch these numbers come in. In the first 5 minutes, I can expect a much smaller movement. I could probably get in within 1 minute or even 30 seconds once I see the data come in. And if 75% of the time then it goes the right way, after that, or 2/3 of the time, that's plenty enough percentage to be a winner. There's 75% up after 1 hour. So it's actually, you're in better shape after 1 hour than after 4 hours percentage-wise. After 4 hours, some of them pulled back and it's only 63%. So you can zero in on the time frame even, that within 1 hour or 2 hours, maybe you want to start closing off if you're in profit. Okay, you can really have a trading plan down by using these tools. It's called data-driven trading. So you don't have to try and guess the directionality. Now, as it turns out, it went the direction that I was initially speculating it would. You know, if these are worse than expected, the USD weakened. If they were better than expected, the USD strengthened. So that's actually how it worked out, but we can confirm that by looking at the data. Okay, and with the data, you get to see how far did it move, in which time frames did it take to go that far, etc. Okay, and get percentages as well. So if you trade on initial jobless claims using this type of strategy and you try it, say 10 times over the coming months, if 6 or 7 times you're profitable out of 10, then that's a winning strategy. Not going to win every time, but if you win the majority of the time after trying this announcement 10 times each week, each month, then you've got a winning strategy there, and that would be an announcement maybe you key on each week, each month. Okay, some of these are weekly, some are bi-weekly announcements, monthly. And then you go on to the next one. And you might find that 6 or 7 or 8 announcements each week, after trying them 10, 15 times each, that maybe 9 or 10 of them you can consistently win more than you lose with this type of data-driven trading strategy from the fundamental news announcements. So you have everything here that you need. You have the analyzation tools and the announcements side by side. Okay, pending home sales year over year, month over month. These tend to cause movement in the U.S. USD JPY. Let's see if it comes in above forecast, 60.40. That doesn't convince me. Let's go 4 hours after. 60.40. That's too close to 50.50 to me. What about below forecast? 86%. So there's a bigger reaction here when this comes in worse than expected, when pending home sales are lower than expected. Then you get a reaction where the USD strengthens against the yen, which is the opposite of what you might expect. Okay, the USD strengthening when it's bad news, kind of strange, but that's what happens here. USD rises against the yen when pending home sales are below forecast, and it's not a small percentage. It's not like 60-40. It's 86% of the time, 6 out of 7 times. So there's something to this announcement that when the USD is paired against the yen and the pending home sales have come in below expectation, the USD has actually strengthened against the yen the vast majority of the time. Okay, if it's above forecast, not the case. It's hard to predict. It is down. It's the opposite direction, but not at the 80% level. So I might be more interested only if this came in below forecast later today, maybe to look to make a move on the USD JPY. If in the first 5 minutes, maybe it's gone down. You see, the majority of them in the first 5 minutes went the direction you might expect. And so you could get great entry points for where they've ended up after 4 hours, which is almost all of them up. Okay, and you can have that plan. If it dips down the first 5 minutes after coming in below forecast, I'll take the trade with my stop loss, maybe a certain distance down based on what you see here with the movements, and my take profit after 4 hours around 50 pips up. Okay, time frames, distances, right here from the statistics that you look at. Very easy to walk yourself through with these tools, how to trade on these economic fundamental news announcements. Okay. And we could go day by day, and I would suggest over the weekend, Saturday, Sunday, take some time when you have free time for the upcoming week and find the, 10 best announcements that fit your schedule, that show the best, strongest statistics for whichever currency pairings you want to switch and look at, Euro USD, USD JPY, or if it's a Euro announcement, Euro GBP, Euro JPY, etc., and find the percentages, the announcements that show the strongest percent predictability from the past. And then give yourself week after week a chance to try each one again and again and again and again with low exposures, obviously, so you're not risking more than you're comfortable with, and see how it works out for you percentage-wise after trying it for a few months. Okay. Now, we can go to tomorrow, and there are announcements out of Great Britain. Retail sales tend to move things well. We could look at GBP USD. I think GBP JPY tends to get maybe a little bit larger movement. If we look at above forecast, wow, look at that, 80%. If the retail sales are higher than expected, stronger than expected, the pound strengthens against the yen 80% of the time in the past. Okay, with an average range movement of 114 pips. The largest one went up 215 pips in the 4 hours after. Nothing went down like that. One went down slightly, everything else was up. I'd say 95% of the pip movement is up when looking at all of these, when it comes in above forecast. What if it comes in below forecast? It's the exact reverse, 80% down. Only one went up slightly. Yeah, some of the drops were small, but most of the movement was down as you look at all the announcements as a whole. So if you tried this 5, 6, 7 times, you'd have been in the hole on one, and everything else would have been in the money on a sell after 4 hours. And again, you can look, well, where was it at in the first 5 minutes? And you can say, okay, average range movement 24 pips. After 4 hours, average range movement 98 pips. You see the two that dropped the most, went 105 pips and 118 pips. So the one that lost, not such a big deal when the winners are averaging 100 pips movement in the right direction. And in the first 5 minutes, you see most of them you're getting in after 1, 2, 3, 4 pips movements after 5 minutes. And it doesn't take 5 minutes to place a trade, right? So you could get in even with a better entry point maybe. My point is some of these announcements have high predictability based on the past. Doesn't mean it'll be 80% in the future. And a lot depends on your entry points as well. But you can have a plan for each of these announcements for the distance you think it could move, the length of time to let the trade run before you might manually close it if it doesn't hit your take profit, etc. Okay. Any questions, comments on this strategy of using the economic announcements to let that fundamental news drive your trade decisions based on data analysis from the past announcements? Okay, I don't see any questions popping up, but if I do, I will address them. One more place we can go, I'm just taking a quick peek at that gold trade. It's pulling down temporarily. So one place we can go for more fundamental news without leaving our platform or app is the Market Buzz. Okay, a third option to look at today. The Market Buzz allows you to look at any instrument we offer. You can switch categories, commodities, indices, currencies, cryptos, stocks, and whatever's trending the most online is the bigger circle in the pictogram, and you can pick whatever you want to look at and find the most recent news right here in the news feed. Okay, you also get a technical prediction for most of these. So there's a signal here from Trading Central. It says the price may rise 6.7% on Microsoft. You can click and get the technical signal here with the price levels and the description of the signal right alongside the news feed. Okay, and so you can read the latest articles about, in this case, Microsoft, and see is it good news that's coming out recently or bad news. If, let's say it's good news, you read a couple articles and you say, wow, that's really good news in the past few hours for Microsoft. And then you say, and the technical prediction is that it'll go up. Now you're even more confident because you're pairing this fundamental news with a technical signal and deciding, okay, maybe it makes sense to go ahead and make a trade, in this case, when the US market would open, okay? Or the opposite could happen. You could read the most recent articles and say, wow, that sounds like bad news. I don't think I'll trust this technical signal then, if that was the case. And you can qualify which signals you trust based on what is the most recent news that you find, okay? You see a lot of articles about Microsoft trying to incorporate AI, artificial intelligence, into their products. And you'll see that with a lot of the tech companies. So you can read these articles, see if there's anything new that catches your eye to help you make a decision. Do I want to buy or sell on this, or maybe just leave it alone if nothing convinces you? And so I'm scrolling down. I think I went through 20 articles and I'm only back 9 hours in time. So all of this is recent since this morning, these articles coming in. And so you can read this. The open source model context protocol was just updated. Here's why it's a big deal. Okay, click, read. Did Microsoft adopt that AI protocol in their products? Is it something new they're offering? You can read these articles and see real quick if it's something that helps make up your mind. And so this is a huge time saver rather than having to search for information on your own, which could take hours to find the articles and information about any particular product. I know I've heard some inklings about NVIDIA's, the demand for their chips really rising again. And look, here's the trend analysis. NVIDIA's predicted to go up 17.8%. Again, click on this and there's the signal. Now you can read and see what are the latest articles. And as you scroll down, you can start to see articles that might convince you. Here, this is interesting. NVIDIA eyes acquisition of Lepton AI to boost cloud and enterprise software presence. So, up to this point, NVIDIA's had this big boom because of producing high-end chips that are required for the AI industry. Now it looks like they're looking to expand past just providing high-end chips and also buying a company that provides cloud and enterprise software for AI. So they could have a whole nother niche that they're going into. So this could be something that if you click and read the article, here's a synopsis of it, and you can read the article. Maybe it explains why that's good news for NVIDIA. So you read through the article and see if that helps to convince you that, hey, there's some recent good news for NVIDIA, perhaps. And I probably skipped over some others here. I know I saw an article that was talking about NVIDIA having huge demand. Yeah, here, exclusive, China's H3C warns of NVIDIA AI chip shortage amid surging demand. Okay, that's a mixed bag headline. You might want to click and read that article. It sounds like good news. There's huge demand for NVIDIA's chips. Maybe the bad news side is they can't make them fast enough for the demand, but that's probably a good problem because there was some concern with this whole DeepSeek AI, and you can read about that here too. I saw some articles still about DeepSeek that they didn't need high-end chips for their AI model. And that's when NVIDIA pulled down, like, wow, you can have really good AI models that don't require high-end chips. That was maybe bad news for NVIDIA. Well, that's kind of disappeared here because we're saying NVIDIA has such surging demand for their high-end chips that they might have a shortage. So maybe that eliminates the fear about DeepSeek, killing the demand for high-end chips, because we see, it sounds like, according to this article, if you read it, they can't make them fast enough. They're going off the shelves so quick. So again, that, to me, if I read that article, maybe that's good news. And so in short time here, I found a couple articles that maybe if you read them could lead to thinking, hey, this is good news that just came out in the past few hours for NVIDIA. And then you look and see, and the technical signal says it should rise 17% or more, then maybe I trust that signal more now. Okay, so easy then to wait for the US market to open, see if you like the entry point and the technical setup, and if you do, you make that move in the direction that you think the fundamental news helps drive maybe this signal, hopefully towards a profitable end. Okay, and this is how, sometimes clients will ask me, why when I follow the signals do I lose so much? Why is it no better than 50-50? It's like I'm just guessing. And sometimes that's the case if you're not putting something more into it. Meaning, if you just blindly follow the signals, when this signal came out, these headlines might not have hit yet. And then now new headlines have hit. You need to check the fundamental news maybe, and then decide if the most recent news still agrees with the signal, then qualify that I will follow that signal or not. And probably then you'll see a better success rate with following the technical signals when you pair it with the most recent fundamental news as best you can. Okay? And all of these tools are right here on our platform. You don't need to go anywhere to find this information and have the support of the fundamental analysis right there with your technicals. All right, everybody, I think this is a good place to stop. Yes, Charles asked, can he have a copy of this recording? All of our sessions are recorded, and by tomorrow it should be uploaded to our YouTube channel. So you can check that out anytime you want. This session and all my past sessions and other webinars, presenters for AvaTrade, they're all on our YouTube channel. Mine would be in the English language section, and we have other languages as well that webinars are done in. If you care to listen in a different language. It looks like Charles left, but hopefully his question has helped other people with the answer. All right, thank you all for joining, and good luck with your trading the rest of the day. Bye for now.